So again, you go SimplePassiveCashflow.com/investor letter, and then you click on here to investor level letter number 4, and I'm pretty much going to go through this document for you guys. And if you guys want to chime in with any questions, feel free to do so via take yourself off mute or type it into the channel there. So, you know, I'm kind of just starting out with some of the big highlights that happened over the quarter was the China trade thing. That's been kind of happening over quite a while now, I would say. Probably it's been like, what, 6 months or so. If you're still afraid of investing and you're not over $1 million net worth, I think you need to read this article here. SimplePassiveCashflow.com, invest-proactively-sellers-market. You gotta invest, guys. I mean, you can't do what the guys $2, $3, $4 million net worth and above are. Those guys can just sit on their butts and make 2% and they'll be fine. But for those of us who are not there yet, you got to keep investing. So here's a little write-up I did on the China trade war, and a lot of cool commentary came from the Facebook community that we have online. I cut and paste a lot of those comments from that into here so you guys can read just a whole bunch of different point of views. And I have a bunch of other articles on the China trade. Some highlights, some of the new podcasts and articles. I have a new article on if you guys are still looking for single-family home rentals or looking to vet a new property manager, 25 questions to ask a property management company during an interview. And I'll caveat that saying that don't say these questions verbatim and don't ask all 25 questions, but just use it as a conversation starter and to start dialogue back and forth. Because a lot of the good property managers, if you start asking all these questions, just like how you keep asking, and especially if you're not an accredited investor, if you're a sophisticated non-accredited investor, asking a syndicator a lot of tough questions, they may just take you off the list because you're too much of a pain in the butt.
Point is, put some thought into it before you ask it.
Right. Don't just be, and don't be like an idiot, right? Because people who are good and are good at what they do have a lot of customers, and they can fire the ones who are a pain. This other article I wrote that I called the Newbie Wall. So what I'm noticing, a lot of people, they'll come into the Simple Passive Cashflow ecosystem because of some kind of pain that happened, like they lost their job or they had a kid and now they gotta make ends meet, or they're realizing that the retirement's not gonna take them where they wanna be. I'm realizing they get really motivated for 3 to 6 months. They read all the content, listen to all the podcasts, but then they hit this wall and then I never see them again. And then I'll check up on a bunch of them because I always track who I talk to, and I find that a lot of times they just gave up because they hit some kind of a wall. So this article here is probably a short read. It's probably something that's good to take a read of. SimplePassiveCashflow.com/wall. If you might be motivated now, but you may not be that way in a few months. So I'm more big on taking consistent effort and keep going. New podcast article number 3, I interviewed Paul Moore, who used to be an apartment investor, and today he's moving to different asset classes like mobile home parks and self-storage. I actually saw him a few weeks ago in Dallas, and yeah, he's kind of over being an apartment operator. A few really big articles, or actually they're more like reports on Bitcoin and crypto trends there you can download. I'm not a big fan of crypto. I think I see it more as gambling, but if you're interested in that, I would grab those 2 documents right there. Episode 153, I interviewed Fraser Rice, who wrote this book, Wealth something. I forget what it was, but basically he interviewed a whole bunch of wealthy financial planners, and a lot of good insights on creating a family office, which is sort of manages the wealth of high net worth individuals. And I think there's a lot of things that we can kind of take away from that interview. I've been looking into this new investment called life settlements, where you can purchase the life insurance of somebody who no longer needs it or no longer can pay for it. And it is a little morbid in the beginning, where you're gonna pretty much buy a dying person's life insurance policy so you can give them their money today. So maybe they want to take their family to Disneyland, or maybe they simply can't afford the monthly payments anymore. Staggering stat that I heard was like 70% of life insurance policies never get used. People will pay maybe a few $100 every month, and for this, big death payout. But most people, they bleed to death in terms of paying those premiums, and they never get the big payout at the end, which is a huge shame. And great for life insurance companies, that's for sure. But as this market cycle matures, and I'm looking to get out of what most people are doing, like single family homes and apartments, look into other asset classes, this is something that I definitely see 2 to 5 years in time horizon. So something, if you haven't heard about it, take a look at that info page. I have it on it right there. For those of you who are private money lending, I don't know why you would do that unless your net worth is over $1 to $2 million. The article here is cons of private money lending. I mean, it's all active income. There's no depreciation. There's no bonus depreciation there. And it's just a debt investment. There's no equity. There's no upside of it. I don't know why people invest in that stuff as passive investors. Actually, I do know why. You don't have deal flow. You don't know people. So that's kind of why we network with people, just like how we did this first 30 minutes of this meeting here. Number 9 here, land conservation easements. Now this is kind of an exotic one for a lot of people. What you can do is you can find an operator that puts a land conservation easement on a piece of property and designates it. Nobody can develop on it, and the government sees this as a donation. But the trick is you can sort of get a bonus on how much money you're putting in, and some will say that they can get up to 5 times the amount of money deducted off their taxes for what they put into one of these things. So what guys will do is they'll put, say, $50,000 as a sort of a passive investor, but they're not getting any returns back. There's 0 returns for this stuff. It's a donation, but you're able to get 5 times that much back in deduction. So $250,000. So this is good for the guys who, they're just coming to this real estate investing. They're brand new to it, and they want to bring their 401k in, and they aren't smart about it. They're not strategic on it, and they bring a whole bunch of money, and they can't invest it in equity deals that give them bonus depreciation that cancel the gains, the increase in their AGI up. So they'll do a land conservation easement to sort of mitigate that tax gain sort of synthetically, as opposed to, I prefer to mitigate taxes and not pay any taxes via the more natural way, which is just straight up going into good deals with bonus depreciation. A lot of deals I'm seeing, if you're going with $100,000, I'm seeing anywhere from like 65,000 to 85,000 back on my deals that I'm getting back as K1s in year 1 bonus depreciation. Of course, every deal is different. Every deal has different leverage amounts, but that's some of the real world information that I'm seeing back on my K1s. And finally, number 10 here, one of my good buddies, Michael Flight, who invited me to Freedom Fest to speak on his real estate speaker panel. He's a commercial shopping center investor, and at first I thought commercial shopping centers was really not a good investment, because you think, well, Amazon is going to come and just take everybody out in this sector. But he's not doing the big shopping malls. He's doing more of the strip malls or the neighborhood centers with the hairdresser, the the lunch spot, a lot of those services that will really never be outsourced. Moving on to the next section here is the Not Folks News section, where I kind of pick out. I got a lot more time on my hands these days to kind of read articles and peruse the internet. So I realize not a lot of you guys have that time or maybe even want to do that, but I try and put down the highlights here. So number one here, Washington Post says the China yuan falls below a sensitive level of 7 to US dollar. I've never heard of that sensitive level before, but there's always this fine play between the Chinese yuan and the US dollar as world supreme power in the world. Number two here, the Fed cuts its rate for the first time in about a decade, I think. So that's kind of a big turning point. Some will say that it's the beginning of the end. I'm still pretty bullish. I mean, if you guys heard the last podcast that I had with Richard Duncan and the other guy from the Moneyball Economics, I think it's going to keep going as long as there's no like war or any big black swan event that comes up. CPE executive. Oh yeah, go ahead.
Can I ask a question about that last one?
Yeah, the interest rates. Go ahead.
Yeah, barring any weird thing, do you see any difference between a Republican or a Democrat getting into office?
So I don't really follow that stuff. Only thing I understand is there's this big play between the Federal Reserve Bank and the president. So the president elects the Federal Reserve Bank chairman. So there's alignment there, but after that they're supposed to detach and go their separate ways. Some people will say, "Oh, the Fed is sort of out to get Trump, make him look bad," and obviously so are the Democrats, right? I mean, that's politics for you. So, and then maybe Trump is sort of bullying the Fed to keep rates low, so he can kind of keep the equity markets or the stock markets high for now. I don't know.
Just until election time.
Right. Honestly, I don't know, and I don't really care. I mean, I'm a deal guy. I go after deals that like the rents are undervalued already, and if the economy goes down, well, I'm still fine, right? And that's why you invest for cash flow, because we don't know what's going to happen with all this stuff.
Okay, cool.
Any other people have like thoughts or more insider information or any theories? I guess I'm open to listen.
One theory I heard related to that is so that last increase that he had in 2018, that was just to have some ammo in their back pocket, right? So then when he could, the Feds did the recent reduction now, and like you said, if the markets look good when it comes time to election time, then right, that's all that matters is, oh yeah, my portfolio, my investments are doing well, business is great. And that's one conspiracy theory I've heard of in terms of why they did that one bump up at the end of 2018. It wasn't really necessary, but now you have the latitude to do another reduction, before the next election. Yeah, again, conspiracy theory.
Yeah, because they're all arguing like, oh, you didn't need to do that, or like the economy wasn't doing that great to begin with. Right. Why would you increase the rents? So in hindsight, maybe it was just in August they can make a rate cut, right?
Right. So interesting. And then the back and forth that they go through, right, where president is like unhappy with the raise or whatnot, and is the discord real or not, right? Because like to your point, they appoints the Fed chair, but then they're supposed to be independent after that. But how truly independent can you be if you got appointed, right?
Right. I don't know. I mean, I just think of these are all conspiracy theories, right?
Yeah. to your point, Lane, if you're investing in cash flow, then you should be good in the long run, right?
Right. I think
Yeah, Lane, two thoughts come to my mind is that, first and foremost, I think the significant, stock market, being so bullish, so the conversion of, the stock equity to real estate. So, I'm one of those people that, never thought of, cashing out of the 401ks or IRAs, but, I started doing that, take the advantage of the market being high, transition that to real estate. And the second one that worries me though is, I'm in the Minneapolis-St. Paul market. It's the challenge is that entry level rent. Where is that low though? Because it is slowly and maturely getting out of people's reaches though. So those are the two trends. And then interest rate being so low though, that's a benefit for us to get into an investment. But at the same time, though, the property price has gone up significantly. So even though I have a lower rate interest rate, but then I'm buying the property at a high. So you just cannot make it work though.
Right.
Yeah.
I think the rates came down a little bit, or like they cut the rates, but then the van for houses didn't really move one bit. That's what I've heard this last couple of weeks. But to your point with the rents, right? Like that's one thing I'll watch. Like like places like Dallas, that Class C apartment is already getting to be about $750, $850, where it used to be like $500 not too long ago.
Yeah.
Right. At what point is that person making 45 grand, 35 grand a year just going to be like, they just can't afford it, like another 4% rent increase per year?
And in progressive cities, like at least in Minneapolis, I live in a suburb of St. Paul, but in Minneapolis, city of Minneapolis actually now offering incentives. They would actually give out, city lands plus, up to $90,000 per unit for people to build homes, as long as, they rent it affordable.
Right.
Because remember now the construction that's happening, nobody's buying for that at the entry level classes anymore, at least for rent.
So I'm taking Portland, number 5 here, Portland multifamily report saying their year-over-year rent growth decelerated to 1.2%. And just as a rule of thumb, 1 to 3% annual rent increases in a bull market is the normal range. Portland up in the Northwest is sort of like Seattle, California, where their annual rent increases are usually 3% or higher. So it's kind of interesting that theirs is decelerating. And Portland is one of those top 5 markets traditionally as the lowest vacancy. They just have a really big demand for apartments, especially on the higher end. So different signals all over the place. Number 6 here, it's kind of talking about self-storage. And this is one of the many reasons. This is kind of the reason why I don't like self-storage as much, because this thing gets built all over the place without very much permitting, or construction is pretty cheap on these. And on all these deals, whatever it is, multifamily, mobile home park, self-storage, it all comes down to what's your price per square foot per rent. If you're underwriting your deal to 90 cents a square foot, and you're looking at the comps and you're seeing comps for 98 cents a square foot, and then they build a apartment, a few blocks down, you're screwed. You're totally screwed. And in apartments, it takes a while to build that stuff. In mobile home parks, it just never gets built, because number one, nobody wants to permit a mobile home park because it's ugly and it's just very bad stigma against it. But I think more importantly, number 2, like cities and counties, they can't really get too much revenue out of those things. So they don't want to make any of them because it doesn't make sense economically. So mobile home parks, you don't really see those things popping up. But self-storage, they just come up just like that. Number 7, here's some census data for you guys. You guys can click on that link and digest that however you guys want. Some news on number 8 here, news on the senior housing. I'm overall bullish on the long-term perspective on senior housing because the silver wave is going to come, but I don't think it's here yet. Number 9, this big REIT just is starting to buy into primary markets like Seattle, and this is what REITs do. They buy for more stability, not so much returns. Just more, number 11, it kind of shows how primary residences are very speculative in nature. Yeah, earlier in this year, we had some nice news where there was an article in Yahoo saying 3.2% was ahead of the consensus of 2.3%. I believe they're talking about GDP there. But then, you pair that with U.S. stocks mixed after blowout. ExxonMobil misses there. There's a lot of volatility. Another number 14 there, U.S. Census data in Excel format. I know you guys like that. You guys can cut and slice that on your own. I like to follow this Yardi report too. You can download there. And here's sort of a highlight of some institutional view of where the multifamily markets are at. You can download the whole report there. Here's a chart that I like a lot. On one axis, it shows where are jobs going, and then on the other axis, year-over-year employment growth. Again, the big ones there are Dallas, Orlando, San Francisco, Seattle, Phoenix. But those are also all the hot places, right? I mean, you don't really want to look for a property in Dallas these days unless you want to compete with 5 other apartment investors at the best and final table. I would kind of look for a little bit more of the less heard of cities if you're kind of looking for your own deals. Any other market comments or questions? So I'll wrap up here with kind of some things I've been doing personally. I read this little article on the happiness archetypes. There's the rat racer, like hedonist, happiness, different ways to look at your future and looking at life. So you can read the article there. It's kind of interesting. I always break down my life into these 6 categories, the Tony Robbins needs, and try and always improve and strive to increase all of them. Not saying that you guys have to do this, but it's just we kind of float around in life, and without any real goals. This has kind of allowed me to kind of focus on things that, if there was a scorecard in life, it's not really measured in dollars, but I think it's measured in these 6 categories. So for the first category, growth, I've been kind of setting aside a 1 or 2 hour time block on my calendar to kind of learn new things, to just unplug and read a book, read a workbook. Number 2, ways I've been sort of trying to contribute back to others. I've been trying to find ways that I can purchase things that help you guys, like the Rent-A-Meter. You guys can click on this link and see what I'm talking about. But things that I can purchase, especially for the Mastermind, the Passive Investor Accelerator group, things that might cost a little bit that the average person wouldn't want to spend a few $100 on, but for like 40, 50 people, it totally makes sense as a resource. If you guys have any ideas there, let me know. Other things I've been trying to do is just minimizing all the garbage in my life, all these small activities that take up a lot of time and are just a big headache. I've been just sort of passing the control to day-to-day operators and true experts. Some number 3 here is significance. This is all about making yourself feel special, because we all, at the end of the day, we all like to hear ourselves talk and feel special. That's probably why I do this podcast. So I don't really interact with too many people throughout the daytime anymore because I don't go to a job, but it's nice to connect with people on the phone. So that's why I like to have, you know, all these introduction calls to new investors. It's fun, and it makes me feel like I'm doing something, changing the world a little bit, without really having to put on a nice shirt in the middle of the day. For uncertainty, you know, because you have to have certainty and uncertainty in your life, a good mix of the two. So I've been kind of trying to get out of my comfort zone. I know apartments, but I'm just trying to move into a different asset class and learn that a little bit. Certainty is a big thing in my life. It's why I invest for cash flow. But I've been trying to get back in shape. Being on traveling for the last couple of months doesn't really help. But I got back on this pre-workout C4 supplement. It's supposed to make you feel like you drank like 2 Red Bulls without any of the caffeine. I don't know how it does that, but whenever I go to CrossFit class, I'm really sweaty and I'm really warmed up already, ready to go.
Is it working?
I think it is. I don't know.
Are you running at all, Lane?
I'm not a runner.
I see.
I'm horrible at running. I probably run like a 10-minute mile.
It's pretty
That's
good.
not bad though.
Yeah.
Well,
there's nothing like competition to push you.
Yeah, I mean, that's why I go to CrossFit, because if I didn't, I would do nothing. Like I recognize like I'm a product of my environment and my peers. You know, maybe you're one of those guys who can take a C2 rower and just go in a closet, lock yourself in the dark, and just beat yourself up all by yourself. That's not me. You know, I'm not that stoic. I need other people around me. I need somebody else around me that looks more out of shape than me and that I feel like I have to beat. Number 6, love and connection. Everybody needs that. So I just went on this tour with a few investors. We went to Birmingham, Atlanta, and we got this big house, and it was pretty fun. You can click here to watch the highlights from the tour. Saw a whole bunch of other property managers and rehabbers that I've kind of worked with in the past. It's good to connect. And I'm actually going to be kind of planning a Hawaii mastermind, I think, in the near future. I think my goal is next year is to have it kick off. And maybe we bring people down to Hawaii for maybe a day and a half. And then, you know, have dinner both nights and maybe have some kind of activity, like a snorkeling thing or a luau or an escape room or something like that. And have it to be more of an intimate environment as opposed to your typical conference. Of course, mostly accredited investors would be coming. So it'd be a very potent group.
Hey,
Yeah, go ahead.
You're in the main island, right?
Yeah, Oahu.
Yeah, okay. Just curious.
Yeah, so the idea would be, you know, you bring yourself for a day and a half. Your family goes and does something else, but essentially it's just an excuse to write off the trip as a business expense. You can tack on.
That was my next question. Would this be a tax write-off? Okay.
Well, I don't know. I mean, you know, I'm not giving you legal or tax advice, but if it were me, I'd do it. You know.
Cool.
You know, the key is to tack it on at the end or before the trip. But I mean, that's every time I go to the mainland. I mean, that's why I do a little meetup in Dallas. Like I was just in Dallas 2 weeks ago, or when I fly through San Francisco or LAX, I'll usually take a long layover and then have a quick meetup for 4 or 5 hours, and then yeah, there I go. It's eligible business expense in my opinion. Oh, and stuff. People are always asking what I spend my money on because I don't really spend too much money. But I bought this really cool Papa Shot thing on Amazon. It was like $275, but it's probably one of the most funnest thing I ever bought in the last 6 months. So you can click this link here and you can find all this other cool random stuff I buy. I don't have kids, so I can buy all this crap I want.
Awesome.
And yeah, so if you guys like the networking, that's a good taste of what we do in the Passive Investor Accelerator Mastermind. It's a 27 weeks of content. We do a bi-weekly Zoom video conference call, kind of like this. And there's about 45 people in there. Most of them are accredited, high-paid professionals. SimplePassiveCashflow.com/journey. But I want to end today's call with any last question before we hang out for the evening. Open
Lane,
forum.
you said that you do these monthly?
I think I'm going to try to do these monthly. I've been doing them quarterly because I just
Okay.
didn't have time. But then these articles, if you go back to the SimplePassiveCashflow.com/investor letter,
Okay.
like if you go through some of the old ones, they're just overwhelming. It's crazy how much stuff is in each one. So what I think I'm going to start doing is create like a nice PowerPoint presentation as opposed to like in ghetto fashion, like scrolling through the article I wrote, but have it in a nicer presentation form and do it more on a monthly basis so it's less stuff. But things will always be changing based on your guys' feedback first. All right. If nobody else had anything else, any other last questions before I hang up?
No, thank you very much, Lane.
All right. We'll see you
Yes,
guys
thank
next
you.
time. Bye.
Thanks.